The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, this 13th day of October. My pleasure to be here, and thank you to John and Steve for 3 great hours. This is the 11 o'clock show, Tiger Technicians Hour, and I'm here Monday through Fridays. I'll be here tomorrow, and then I'm going to be away for a while. And so in the meantime, back at the ranch, what we're looking at is that volatility has continued. We were down the futures were down over 12 last night. They came back, they were very strong. They were up about 3, 4, 5 points. Pulled back very sharply, down about another 11 points. And then now they're back. The futures are, the S&P futures are down 2.75. The Dow is up 3.86. Wow. This is such a fascinating market. The thinking has to change. On the way up, your thinking should be, the tide is coming in. If I throw a piece of driftwood out, buy a stock, I should be saved by the tide coming in. This is different. There could be a counter-trend rally at any moment here, but in the meantime, back at the ranch, the tide has changed. The weekly charts on Friday gave signals that said, time and price to the downside. You got to be careful. A chunk of the move down might have been made, but there's still a rotational aspect that's going to include the semiconductors, and today we're seeing even the biotech start to pull back very sharply. So with that, we've got the S&P futures up 2 right now. Look at the pattern. You got a beautiful arch formation. It went underneath the 1882.75 low of August the 8th, and what is happening now? You've gone to 1880.50. That low made earlier overnight has not been breached. You're making a very long-legged doji, and that basically says you've got a trading range here between the 1918 to 1930 level, where the 9-period exponential moving is on the upside. On the downside, there's this probing for lower lows, and that would say that the 1872 to 1863 area could be next. If there is a failure that is sustained to the downside. Most importantly, the 120-minute chart is trying its best to make some kind of a cup formation here. We'll watch it. By the end of the hour, we'll have a much better feeling for everything. So now, being the beginning of the week, let's just move this 120-minute chart over to there. Let's go straight to the numbers. You've got INDU, the Dow has hit the 200-period exponential moving average. It closed right on that level. As I say to my subscribers, this is subscribers to my opening call, to my daily newsletter, we've had some really nice trades on the short side. We're still holding the trades on the short side. We've taken profits in part of the positions. Why not? I mean, you know, this you got to, when levels have been achieved, that on the left side support levels that could become some kind of a base, it's very important to use those judiciously. So we've tried to do that, and you see this dashed inside Chapman wave, inside wedge, pink line. Look there, that line was hit exactly this morning. The low on Friday was 16,543. Today's low is 16,463. Amazing how volatile this market has been. So so that's what you've got to consider. So I'm going to see something here. Yeah, the volatility index has gone in the 120-minute chart, has gone to a leg E. We're ready for at least an attempt at a rally, but remember, the psychology has changed. So those rallies could be fairly short, just as the consolidations to the downside, when we were moving up so strongly, were very short. And don't expect that you've got yourself a 3-week rally here, 3 days, maybe 5 days, and then whoop, we start to retest lows. That's my opinion. Now, what's very important about this is when you go back to the Dow chart, look, the Dow weekly chart has made a peak D. Now, I spent, as you know, I've spent weeks, months, in fact, it could be, on this particular pattern to see what exactly was I missing. I wasn't missing anything. What I had said is there's a chance that there was an instant restart right here with a count. If I made one change to the peak, making it peak F, the 20th of September in the Chapman wave. I talk about the Chapman wave just real quickly so that you can understand what I'm talking about. Chapman wave identifies the lowest low bar, and from that moment on, you merely count each successively higher peak. Peak D is where you can expect it to go if there's a buy mode. And at that point, anything can happen. You could recycle to the upside, or you could have a much deeper and longer pullback. In this particular case, this is the 10-minute chart. There is nothing here. I didn't even need candles. I only got candles so that you can see it better. I only need the highs and the lows. Chapman wave went from a peak A to B to C to D, held firm, and then what it did, went to E and F, and at peak F, the sixth highest peak, had the sharpest pullback. That's what you can expect from a peak F top. Now we've had a single leg A up. It's going to be really important by 12 o'clock when the show finishes, where this 10-minute chart finishes. So look at the weekly chart. There's no question about this. This is a peak D with a down arrow. MACD recycled lower, it deflected lower. Stochastic made that what I call the double camel hump. Don't want to have to get into that. It's just it's a right shoulder failure pattern in the stochastic, and it went right back underneath 80%. So you've got this confirmed, and now this is a really important support. The support, I would have to say, in this particular instance, before you can even get to 16,112, the uptrend line in the weekly chart, how the whole area right here of 16,400s is treated in the next 2 days is just going to be absolutely critical. Is there another bounce towards 16,840 in the weekly chart, the 9-period exponential moving average, or is it just going to be a rally failure and you're just going to make lower lows and lower highs? I'm not going to talk about the monthly chart other than to say that the monthly chart, for my subscribers this past weekend, for any of you who just signed up recently for my subscription to the opening call, remember you got to refresh, and what you will find is that I update right up until 8:35 in the morning when I send out my Traders Corner. That's the final thing with all our positions. What we're looking at, I include parameters for indices and even stocks that we don't even own, but it's really important in my work to be able to look at them. Most importantly, let me just add this right now. When I'm in Australia, which is going to be 15 hours ahead, it means that when the market closes at 4 o'clock, I'm looking at it the next day. It's going to take me 2 days to get there, first of all. Next day at 7 o'clock in the morning, I can start doing my opening call, which I would probably do. But that means if I post it, because it only shows up the next day if I post it after 1 or 2 in the morning, you might find that you've got the next day's call on the same day. After the close, I will be posting. I'll try to update it if I'm around during the next day for the correct date. So please check the date, because it'll say Traders Corner for, and I'll actually state, usually I don't state the day, but I'll put for Wednesday or whatever it is, and then I'll put the date. So remember, after the close at 4 o'clock on any market day, start checking to see if I haven't already posted a chunk of charts on my Traders Corner. I will try to do it as soon as I can. Otherwise, it will be there the next day. I might miss a day. I will let you know. There's a chance that I might not get something out for Wednesday. We'll see if I am able to or not. But you'll have something at some point Thursday before the opening. All right. With that said, there are a couple of things that I'm going to do here. I'm showing you that the weekly chart of the Dow has given me a peak D with a down arrow. That's time and price to the downside. It's the monthly chart that made a doji high at 17,350 in September, and we're watching this really closely because everything about it is suggesting that the daily has affected the weekly. The weekly is affecting the monthly. So we're going to be watching this real closely. This is exactly halfway through the month. I don't want to get involved with the monthly chart just yet, other than to say there's a great likelihood that if we have a sell signal if we have a peak E, I have to wait a little while before we can get a sell signal. You're going to close decisively under the 9 EMA. The MACD has to go decisively low. The stochastic, which is at 87%, really has to go under 80%. So I'm not putting a down arrow just yet. So that's there. Now look at the SPX, SPX.X. Sell mode in the daily, sell signal in the weekly, which went to a sell mode on Friday. So I have now I can put a down arrow in there, And what we've got is strong resistance in the S&P weekly chart in the 19, it's at 1898 down 8 right now. This whole area, that was supposed to be support, didn't even hang around long enough to be support except for that 1 week of the week of the 3rd of October. Last week it just failed and miserably went to the low of the week, right at the close. And what we're looking at now is the whole area of 1931 to 1943 is going to be huge resistance. Okay. The QQQ series, I'll do that because no one is trading the composite index. The QQQ series is at 93.87, down 57 cents. Now look at this. That left side low of 93.89, it's been taken out today. This is the day, and tomorrow has to climb back above 93.80, has to close above 93.89. That's going to be imperative for there to be a bounce. If there's a bounce, 95.30 to 96.40 is going to be really strong resistance. The weekly chart is as a peak D. I hesitated a little, absolutely said, yes, this is a serious sell signal to a sell mode in the weekly chart. A bounce to 96.70s in the 9-period moving average in the weekly could be the best that we get. Now, this is going to be really important. I'd like to go to gold. GCZ, is gold about to have, it's up, the GLD is up 66 cents at 118.25. That's kind of pathetic, but that's okay. It's something. Why? Because the gold contract itself in the weekly chart tested successfully. It went under the 1185 low. It went, yes, under the 1185 low of the week of the 3rd of January. It went to 183.30. And it bounced back. That's exactly what you expect. And I've drawn in the arch formation. I'm making it a little bit bigger because the dollar could take a little bit longer to consolidate its huge gains. So that says that the gold could rally up to maybe the 1237 area. 1230, it's at 1230 right now. So 1237 to 1255. That would be, I would have to say, whoops. I would have to say that is the arch formation that I would anticipate if there is going to be a rally as the dollar, bless the dollar. Here we go, dollar. Dollar's making a peak D top with maybe a right arm, a right shoulder failure pattern here, the H pattern. I don't know yet. It appears that it would do that. And then that 84.94 level in the daily chart is absolutely imperative to watch. Now let's just do TLT before we wrap up this segment and we go to a break. TLT's in leg C in the daily. TLT's in leg C in the weekly. TLT's in leg C in the monthly. Hey, 3 C's. I haven't seen that for a long time. So that's very positive for the TLT. I don't think rallies are going to last much in the market. Money's flowing out of stocks and into bonds. I'll be right back. Basil Chapman, Tiger Team.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's down 45, S&P's down 9. We're going to go to California from here. We're going to Brenton Martinez. Hi, Brent. How are you?
I'm doing just great, Basil. How are you today?
I'm well, thank you.
I wanted to first say have a safe trip back to Australia.
Well, thank you. Well, for me, it's going back just to visit because I'm originally from South Africa, but my brother immigrated to Sydney, Australia. So we're going for a family affair, so it should be great. And thank you. Sydney is a very, very beautiful city. They take great pride in everything they do, what they design. My brother's a city planner, so he always shows me all the sites that most people would not see and all the stuff that he was involved with. And I know from him that everything they do, whether it's a bridge or an access road, it's always done with an artistic and a humanitarian side to it. There's a lot of study that goes with it, and it's always environmentally friendly. It's a very interesting place. So I'm looking forward to it. And we'll only be there a very short while, but it's great. So, yeah, thank you. Brent, you wanted to look at?
I wanted to, if we could, revisit PBR, please.
Okay, now, you know what's so fascinating? Folks, we did this together with Brent recently. Brent has some fabulous entry points for PBR, which is going to be called Petróleo Brasileiro SA. It's an ADS. Because it's a foreign company, they often get gaps. But this had a beautiful gap off the low. The low was 13.01 on the 2nd of October. Brent got in early. Brent, you still in?
I am. I'm in at 13.20. So.
Okay, so now he's in 13.20, just a mere 19 cents off the bottom. And I must tell you, I've been looking at this, even after you called, I looked at it. I couldn't for the life of me understand how, I don't know what area they're in the petroleum industry, but they are acting so differently from the price of crude oil. They seem to have absolutely nothing to do with the price of crude. If you look at USO, which is the United States Oil Fund, trading at its low, a weekly low from the 39.44 high back in June of 2014, trading now at 31.91. I mean, wow, that's 18% or something. So that is huge. And yet PBR, do you know exactly what they do?
Can I add something here, Basil? Hopefully
yes.
might enlighten a little bit. I think fundamentally what's happening is they just had an election in Brazil.
Right.
And the person who's been in charge is more socialist-leaning, kind of like Hugo Chavez, who potentially could nationalize that industry. And It looks like that they just had the election. There's going to be a runoff election, and the person that she's going to be up against is more conservative, who would obviously be more business-friendly. And so and it looks like he could win, so that's what's putting a little fire underneath it.
I see. Now, you know that if you look at it, the left side, I don't want to talk about this as a head and shoulders because it really is not a classic head and shoulders, but it is making the right shoulder in the area with resistance at 17.70. Of course, you wouldn't mind 17.70. It's at 17.07 right now, but $1.45. So there's a story attached to it, but the MACD is at 82%, and the MACD has turned really positive, and the stochastics at 82%. So as long as that holds, I'm looking at it as doing nicely. My only concern is that stocks like this can sometimes, it doesn't really have a history of it in recent times, but they do have a history if you look back when there is a political connection. They have the propensity to every once in a while take a huge dive to the downside. This one's also taking dives to the upside, but they can do that. So I just want you to be aware that at any point there could be some kind of report, and it quickly fills the gap between $15 and $14. So with that said, what I'm going to suggest to you is that if I look at it purely as a structural play, that the daily has had a huge move to the downside, got oversold. This is an oversold bounce at this point, based on the weekly chart, because the weekly chart says that after a move down like this, a 50% retracement is kind of where you'd expect it to stop. So that could be somewhere in the mid-17s, it's close there. It's the weekly chart that is the one that I said to you is my only concern when we originally spoke, because it had that potential to have a single leg A up, hit the 200 period moving average, and then start to plummet. Well, it hasn't done that yet. So I like it. I'm just going to suggest to you, I wouldn't add to the position, but I'd make between 1590 and 1540. I'd be a little cautious. If it got there, I'd maybe take a little bit off just in case it's going to break that support level. But it's looking real good right now. Thanks so much for calling, Brandon.
Have a great trip, man.
Thank you.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We're back. Dow's down 25. S&P's down 6. And we're going to go straight over to Marvin in Orlando. Marvin, how are you?
Hi. Thank you, Basil.
Hi. You'd like to look at?
Right, the trend. I just want to get your feedback from Friday's close on the trend and see if did that signal any kind of reversal at all.
You know, it's really interesting. The action last week with the short-term trading index that was developed by Richard Arms. Now, I'm not going to be speaking to it in the terms that Richard Arms uses it. He developed it. He has his own way. I've just two principles involved in the short-term trading index. One is if there are certain levels on the downside, a certain level on the downside that is hit, I'm anticipating within one day there'll be a very sharp move in the S&P futures will impact the cash indices. And if there's a very high move in the short-term trading index intraday, it will impact within 2 sessions the upside. Did I say that correctly? No. If it impacts it on the downside with a very low trend, there is a slide within 1 day. There is a slide in the Dow. I use only the Dow for this particular technique. And that slide could be 1 point, or it could be 1,000 points. It makes no difference. It's a slide. And then there should be a rally attempt. If it's on the upside, it means within 2 days, there should be a rally attempt. Oh, I got that right. I don't know why I said it incorrectly. Now, Friday, this is so fascinating. Let me just go to my chart that I show my subscribers every day, my overview section. And folks, for those of you who get my work, for some reason, I don't know why, because I did so many charts over the weekend trying to get you up to speed with what I'm looking at over the next week or two for my subscribers, that I forgot to post, and then I just obliterated it. My overview section, which I spent so much time writing. But anyway, basically there was a section there on the VIX and the overview, and that was just as important. But what I'm looking at here in the volatility index is that the VIX went to a leg E. Now the VIX and the trend are sentiment indicators. The short-term trading index is based on other factors, but what's really important about it for me is that there are certain levels that I look at, and that's the only thing I look at. That's the one way I look at it. That's on a purely technical basis. But then there's another way to look at it, and I do the same thing for my subscribers every day. I discuss mostly the VIX, but when I talk about the trend, it is only specifically on numbers. But there is another sentiment on the VIX and the short-term trading index, the dollar trend. That's how I get the Richard Arms short-term trading index. I use it if at certain points the market is doing something and yet the VIX is doing something completely different. It's telling me a different story. And if you look at the trend, let me just pull this out right across here. You will see, I could do it on a different chart, but I'll use the chart that I show my subscribers every day. You will see that there's a level in the twos, somewhere in the twos. Can I do a straight line? Yeah. Somewhere in the twos. And it doesn't happen very often. And that says that that is indicating a very high degree of nervousness and selling pressure. I use the VIX index really as a buying and selling gauge. That's not the way it was developed. That's the way I read it. And I use the trend in a similar way. And if you remember, for subscribers, what I said the other day, when the Dow was 370 points, whatever it was, to the downside, and the S&P over 30 points to the downside, I said the short-term trading index must have gone out for the day, must have been visiting friends, because it didn't even recognize that the market was down. I can't remember what day was that. That was right there. That was last week on the 9th. Well, on the 9th, the short-term trading index had a high of 1.45 and a low of 0.84. I mean, come on. Even before, on the 8th, it had a high of 225 on the 8th, and that was the day that you reversed up 220 points or something. So this is not a good sign. So there are two specific levels that I look at, but there are trends that I look at as a separate phenomenon. And if I see that the trend is ignoring weakness, it's saying to me that there is a high degree of complacency, and that complacency will eventually turn into very nervous selling. That'll show up in the VIX index. The VIX did respond, but the trend didn't. So to answer your question about the trend, if I look at the daily chart, now I'm going to go to a different daily chart. If I look at the daily chart, you will see that from the chart itself, it would have been very difficult to gauge exactly how much the Dow and the S&P and the IWM and the Qs and the NYSE have fallen over the last couple of weeks, because it has definitely not been up in the high levels like it was in June and July, I think it was. Yep, July. It hit 2.54. Just earlier in the end of June, it went to 2.29. So it's only now beginning to have spikes up into the twos, and that's saying to me there's plenty of room to go to the downside based on this index. But if you look at the weekly chart is telling me something a little bit different to what has happened before. It's saying watch the trend, because so far you haven't seen weekly closes above the 9-period moving average, except for one little pop-up and then pullback. When you were having that great volatility going into late December, early January, the trend index on a weekly basis every other week was closing above the 9-period exponential moving average. So this is saying to me we're slowly building up the potential, just as I've been talking about the VIX index, building up a higher highs and higher lows potential. The trend doesn't quite act that way, but there is going to be a moment where it starts to trade above the 9 EMA a little bit more than it has. And when it starts doing that, that's going to be because the weight of selling pressure is starting to increase. And at this particular point, right now, you're kind of at an inflection point. You've hit targets to the downside in many of the stocks and indexes that I'm looking at. So that's going to give the trend room to not move higher over the next couple of days if we have a bounce in the market. So I'm going to answer you. So specifically, you got a particular point about the trend or just a general?
So trend related to a bounce. So do you expect to see a bounce in the next few days?
So now what you've got to do is you've got to kind of separate out the trend. Bounces can occur without necessarily having the trend drop much. Just as we've seen that declines have been going on lately and the trend hasn't rallied all that much. I would prefer for you to be using the VIX index, the volatility index, as a gauge rather than the trend. I'm just using it in an abstract form. When the number hits, it tells me a story. The sentiment itself, I will only get a feel for when the trend, so as today, a little bit, not much, but a little bit, it's responding to the weakness. We haven't quite seen that for a while. So it's kind of waking up. So here's what I would say to you. Sudden spikes to the 1, almost to 2, is telling you now there's selling pressure and nervousness, and that as my rule is if it's up in the higher levels, that's where, I'm not going to give this specific number, but if it's up in the higher levels, that's where you can anticipate that within 1 to 2 sessions, the E-minis, the S&P E-minis, are going to have a really strong rally. Usually it's overnight into the opening, and then we'll see whether or not, if it doesn't impact as positively the cash indexes, that's showing a tremendous sign of weakness. We saw that the other day. We saw that on the day that the Dow went up over 200 points. We had an indication that said that that there should be a rally in the futures that went on to the cash indexes, but I think we used it up on that Wednesday in the 2 hours after the Fed speak. From 2 to 4, we actually usurped all that energy. So it did work, but it worked immediately rather than the next day or two. So I'm just going to say to you, the trend, think of it as starting to tell you a story. If it begins to trade, I would say if it starts to make the kind of 1 to 0.95, the low, and it starts to move up from there, that's when you should start to see more selling pressure sustained. But at this particular point, I would say to you it's the VIX index that you'd be able to garner a lot more information from. So I hope that helps.
And the S&P, what kind of number do you expect it to bounce to? Do you have an idea?
Well, let's do this. SPX.X. What I would think of right now, sitting on the 200 period exponential moving average in the daily chart, if ever there was an opportunity for the S&P to bounce based on the 120-minute chart of the S&P at 5.91% in the slow stochastic, the MACD just giving a hint in the histogram that it wants to start a little bit of a rally. My suspicion is that at 1899, you could get a bounce to between 1912 to 1918, and then I'd have to reassess to see where everything is at that particular point. But that would be, and that would give you a bounce in the Dow of about 200 to maybe 300 points. I must tell you that when the tide changes, you've got to change your thinking. For those big moves that we would see before, let me just show this, let me open for the big moves that we would see before, look at the low of April, was it April or May? April the 11th at 1814. Whenever there was a bounce, you held tremendous support and you hardly took a break. You just moved up for 2 days or 3 days, and it wasn't all that, you moved down just a little bit, and then you moved to a higher high. And that kept all the way through until the high of about the 24th of July, 1991. And then it had a really quick drop down to 1904. Then it ran up to the all-time high of 219. 211 pulled back, went to 219 on the 19th. So you've got to, the thinking has to change to say that probably the rallies now are not going to be as big. So I would say that just by my eye, the 1937 9-period moving average resistance on the daily chart, that's 300, it's almost 400 points in the down. I don't even think we're going to be able to do that because the tide has changed. I will deal with that if I see that this 200-period exponential moving average has a V-shaped potential by Wednesday or Thursday. Then I'll have to consider, okay, maybe now we can go to 937. But when you've got the semis just now starting the big move to the downside, and the IBB has come back quite nicely, but it's still down, and that's the biotechs. They're starting to take it on the chin. It tells me that the upside is fairly limited, and it's rotational. And unless everything comes together and everything moves up to as it did on Wednesday when the Fed came in, and everything moved up into the close, that's a little unusual. I think the rotation is going to now, whereas before rotation was the way the market held up from the summer of 2010, now rotation is the way that you've got a limited upside. That's just my thinking at this point. When I see my Dow quartet start to show real good signs of a pretty decent bottom, that's GE, IBM, MMM, and UTX, then maybe I can see a bigger bounce. Certainly we are oversold and we are due for a rally, but you know when the tide changes, what you do and what you get are sometimes two different things. I'm going to be watching it real closely. So I hope that gives you some sense of what I'm looking at.
Oh, great. Thank you very much.
Thank you very much for calling. Always appreciate it. Marvin in Orlando, Florida. We're talking about the trend, talking about the VIX, and talking about the S&P. Now, let me just show you something else. The reason why today of all days is the day that there should be a finale to the probing on the downside based on the 120-minute chart is because the stochastic, although it's really pathetic at 6%, is showing us signs with the unbalanced volume that there could be a sudden push to the upside, and that would allow a test of the 1916, that's why I was saying 1916 in the 120-minute chart, maybe even 1918 to 1922 by midweek. I am anticipating if there is a rally and the rally is able to garner some upside energy, that energy could last right up into Wednesday or maybe Thursday morning. It is time, it is due for a time move. Now, price might be another thing, because you can see every time the market's tried to rally, it's been whacked down like whack-a-mole. But every time it's tried to decline, there have been buyers. So in fact, very often, analysts talk about the fight between the bulls and the bears. And I'm thinking, yeah, it happens all the time, but there was really fighting towards the end of last week between bulls and bears, and today you can see it as well. Downside, upside, back down, give it all up. Now the upside is being attempted again. So I think probing is the word, and this is not a trampoline bounce. This is, it's not a dead cat bounce. I don't like it. This is a bounce attempt. If it has follow through, we'll know by today at 10 past 3 Eastern time, and tomorrow morning at about 10 past 10. We will know whether there's enough energy to garner a bounce all the way into Thursday morning. I'll be right back. Dow's down 15, S&P's down 4.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, we're back. Dow's down 11, S&P's down 4. Very interesting. I got a nice note from the Tigers. You guys are actually fantastic. I mean, you just mentioned something, you get a whole bunch of information. Oh, I must thank everybody who's been sending me all the all the stuff on the mega cycles that I've been talking about for a while, about the about all those buildings in New York, about automobiles, about whatever it is that is going into a mega phase. It just fits exactly with what we're looking at. But can you believe that they used to in PBR, Petrobras, so this used to be, and maybe still is, a terrible unemployment insurance rule. Work 3 months, you work 3 months and get fired, the company must pay you 90% of your salary for a year. Wow. Anyway, what can I say? This is what we were looking at. We were looking at the price of PBR. We're looking at the trend. And now I wanted to take a moment to do a couple of things. Look at this. Berkshire Hathaway. Berkshire Hathaway is still holding up at the highs, but it made 142.45 peak D top at 140. 142.45. Let me type that in. I got it typed in. 142.45. It's trading at 137.44. No big deal. But it is sitting on that 9-period exponential moving average. When and if Berkshire Hathaway B shares breaks under 132 on a weekly basis, closes under that, that's going to impact the monthly chart and say, yep, that was a peak F top. At this point, yeah, it could have recycled. Maybe that's a brand new B. I'm calling it F for now. I don't have any reason to change that. I'm just saying that that's what I'm going to be looking at. One of the many stocks that gives me a good clue as to what's happening. Here's another thing that I wanted to show you. Let's just run these quickly. IYR, I get calls about this all the time. Emails about this. I had said not to short. I had someone say, hey, how about shorting IYR? And they said that back at about on the 24th, around about 69. I said, no. If anything, it might be considered a just a source of income. And even though it might be considered as a dividend stock, that it is vulnerable, that dividend is really the play there. So I wouldn't touch it, even though it might not go very much higher, it might not go down that much either. So I'm watching it because it made a peak E in the weekly a while back and a peak D even further back at 76.21, and it's making that arch formation. Got to watch this real closely. IYT, I spoke about that for weeks now. Horrible action. It went from 156.28, the iShares of the transportation index. Look what happened. 156.28, trading now at 141. 10% bloop, just like that. Peak G in the weekly chart. Remember the Groucho Marx eyebrows I spoke about? And look at this, peak F. Almost certainly a peak F I can't say certainly. Most likely a peak F in the monthly chart. You got to be careful, folks. This is not a time for playing games. So what's important about this is that the airline index, this is unbelievable. The airline index, which should be soaring, pun intended, having made a double top in the 88s area and a peak G. This is just a classic Chapman wave peak G, not a peak F or a D, but a G because of the way the MACD held during that instant restart over there back in June, July, or whatever it was, of 2013. So I'm watching this and I'm saying, wait a minute, crude oil comes down like a rock, and the airlines are impacted, and they've been impacted before the Ebola scare. This doesn't help at all. Same as the hotel group. I mean, I spoke about this. I already don't want to talk about this because we are still short. But look at this. This is the Marriott. Why would Marriott be plunging like this when it's been such an incredible stock? Something's going on that's really important. So, folks, I'm going to hand you over to Larry Pesavento. He'll continue with his theme at looking at the market and using all these different techniques. Should be a wonderful show as always. I'll be back tomorrow. Have a good...
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.